If I had the chance to rewind time and start my financial journey from scratch, knowing everything I know today, I would approach money very differently. Like most people in the beginning, I was confused by conflicting advice. Some people told me to invest aggressively in stocks, while others insisted that life insurance should be a core part of my financial plan. At the time, it felt like I had to choose one over the other. But after years of learning, mistakes, and real-world experience, I've come to understand that the decision isn't just about numbers. It's about strategy, discipline, and aligning your choices with your life goals. So if I had to start over, and I had to choose between focusing on stocks or term life insurance, here's the honest truth about what I would do and why. Today, we will talk about if I had to start over. Stocks versus term life. My honest choice. So, before we start, make sure to hit the like button and subscribe to my channel. Let's begin with stocks, because this is where my strategy would start if I were starting from zero. Stocks represent ownership in businesses, and over time, they have proven to be one of the most effective ways to build wealth. If I could go back, I would begin investing as early as possible, even if the amounts were small. The key lesson I've learned is that time in the market matters far more than timing the market. Starting early allows compounding to work its magic, turning consistent contributions into significant wealth over decades. If I had to do it again, I wouldn't try to pick individual winning stocks or chase trends. Instead, I would focus on simple, diversified investments like index funds or ETFs. These provide exposure to the broader market and reduce the risk of making costly mistakes. I would set up automatic monthly contributions and treat investing like a non-negotiable expense, just like rent or utilities. This level of consistency is what separates successful investors from those who struggle. I would also pay closer attention to asset allocation from the very beginning. Instead of going all in on one type of investment, I would balance my portfolio across different sectors and even include some safer assets as I grow older. Early on, I might lean heavily toward equities for growth, but over time, I would gradually shift to protect what I've built. This kind of structured approach reduces risk while still allowing for strong long-term gains. However, I would also approach stocks with a much stronger understanding of risk. One of the biggest mistakes I made early on was underestimating how volatile the market can be. Prices go up and down, sometimes dramatically, and it's easy to panic when you see your portfolio drop. If I were starting over, I would mentally prepare for these fluctuations and remind myself that they are a normal part of the process. The goal is not to avoid volatility, it's to stay invested through it. Another key improvement I would make is focusing on long-term thinking instead of short-term results. In the early days, it's tempting to check your portfolio daily and react to every movement. If I had to start over, I would avoid this habit and instead review my investments periodically, maybe quarterly or annually. This reduces stress and helps maintain a clearer perspective. Now let's talk about term life insurance and how it fits into this starting over strategy. If I had a family, dependents, or financial obligations, I would absolutely include term life insurance in my plan, but I would view it strictly as protection, not as an investment. Term life insurance is designed to provide a financial safety net for your loved ones in case something happens to you. It's simple, affordable, and effective for that purpose. One of the smartest moves I would make is buying term insurance early when premiums are low and health conditions are not an issue. This would allow me to secure a large amount of coverage for a relatively small cost. The peace of mind that comes from knowing your family is protected is invaluable, and it allows you to focus on building wealth through investing without constant worry. If I had to start over, I would clearly separate the roles of stocks and term life insurance. Stocks would be my wealth-building engine, while term insurance would be my safety net. I wouldn't try to mix the two or expect term insurance to do anything beyond protection. This clarity would prevent confusion and help me make better financial decisions. Another important lesson I've learned is the importance of investing the difference. Because term life insurance is so affordable, it frees up more money to invest in higher return assets like stocks. If I were starting over, I would make sure to actually invest that difference consistently. This is where many people go wrong. They buy term insurance but fail to invest the savings, which defeats the purpose of the strategy. I would also build multiple streams of income alongside investing. Relying solely on one source of income can be risky. If I had to start again, I would explore side hustles, skill development, or small business opportunities that could increase my earning potential. The more I earn, the more I can invest, and that accelerates the entire wealth building process. Discipline would be a major focus in my restart plan. I would automate everything, investments, savings, and even insurance payments, to remove the need for constant decision-making. The less I rely on willpower, the more consistent I can be. Over time, this consistency compounds into significant financial progress. I would also pay much closer attention to fees and expenses. High fees can quietly eat away at your returns over time, especially in investments. By choosing low-cost funds and avoiding unnecessary financial products, I would keep more of my money working for me. This is a small detail that can make a huge difference over decades. Another thing I would do differently is build an emergency fund before aggressively investing. This is something many people overlook. Without a financial cushion, unexpected expenses can force you to sell investments at the worst possible time. Having a solid emergency fund provides stability and allows you to stay committed to your long-term strategy. As my financial situation improved over time, I would periodically reassess my needs. For example, as my investments grow and my net worth increases, my reliance on term life insurance might decrease. Eventually, I might reach a point where I am self-insured, meaning I have enough assets to provide for my family without needing additional coverage. Behavior, more than anything else, would be my main focus if I had to start over. It's not about finding the perfect investment or the perfect insurance policy. It's about sticking to a plan. Avoiding emotional decisions, staying consistent during market downturns, and maintaining a long-term perspective are the habits that truly build wealth. I would also spend more time educating myself early on. Understanding how money works, compounding, inflation, risk, and taxes would give me a significant advantage. The more you understand, the less likely you are to fall for bad advice or make costly mistakes. One more thing I would prioritize is clarity of goals. Early on, I didn't fully define what financial success meant to me. If I had to start again, I would set clear targets, whether it's financial independence, early retirement, or simply providing security for my family. Having clear goals makes it easier to stay motivated and make better financial decisions. I would also track my progress consistently, not obsessively, but intentionally. Seeing your net worth grow over time, even slowly at first, creates momentum and reinforces good habits. It turns abstract concepts like investing into something real and measurable. If I had to make a clear, honest choice between stocks and term life insurance as a starting point, I would choose stocks as the primary focus for building wealth. But that doesn't mean I would ignore term life insurance. Instead, I would use it strategically to protect my financial plan while allowing my investments to grow. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.